Well, it's hard not to be skeptical because this comes with the backdrop of Russia attempting to inflict economic pain on Europe. This is what we've been seeing for almost a year now, and their formula is pretty simple. They're going to continue to reduce gas supply whilst issuing threats that keep European gas prices supported. And the good news is that this strategy has largely played out at this point, at least if we assume, as we do, that Russia is not going to attempt to sabotage non-Russian energy infrastructure. And it's played out because Russian gas flows to Europe have already fallen to less than 20% of pre-invasion levels. And while removing the possibility that Nord Stream flows return to the market is bullish, it's only slightly bullish, as Nord Stream's return or a rebound in Russian flows via any route was in any case already highly unlikely. So in terms of our forecast, it doesn't actually change that much. And actually, S&P Global Commodity Insights went further in our latest outlook to assume the remaining Russian flows through Ukraine would fall to zero before the end of the month. Another piece of news yesterday, Russia's Gazprom posted a threat to renege on its obligations to Ukraine's naphtha gas, which is essentially a threat to cut those flows through Ukraine as well.
Yeah, the long-term impact thereof then, I mean, obviously severed ties, communications, relations, all of that getting quite hit massively. And the chances then of Nord Stream 1 coming back online before the year end, I mean, that surely goes from slim to almost none at this stage.
Exactly. Yes, that's exactly the case. And European gas prices have responded. They traded up. They're now back at around 10 times their 5-year average levels. And we respect that these higher prices are what is needed to incentivize enough demand switching and destruction globally in order to balance that drop in Russian flows. But overall, we're actually still bearish to market for the winter. I caveat that because we're still forecasting prices at 8 or 9 times their 5-year average levels. But we think that we are going to get enough demand response at a slightly lower price that we're able to make it through this winter.
James, can you give us a broader reading on sentiment at this point from the market? Because we have this fairly large event. We still don't know the underlying cause here, even though there have been all sorts of allegations thrown by the various governments involved, with the strongest line from Poland. But what's the sentiment in terms of response like at this point? How big a driving force is it, given we've already seen Europe trying to wean itself off supplies from Russia?
Yeah, it certainly presents additional risk, even without knowing who is culpable for it. And again, the market is trading up on the back of that. They're going to be watching the remaining Russian flows going through Turkey, going through Ukraine very closely to see when those are impacted. Again, we're forecasting that the flows through Ukraine are going to be dropping to zero over the next month or so.